An immediate thought that if a bond trader doesn't know the answer to this, then there's a very good chance that an awful lot of guys in the room don't know the answer to this either. So we did a little tweet last night. We said, look, we're going to cover it today in Classroom. And we'll just have a look at that. We'll also take a look at some of the Jack Ryan rotations. Obviously, there's some big drivers in the background which can cause the Jack Ryan rotations, the relationships to obviously alter a little bit. And that's, again, something you just got to be aware of as a trader, especially if you're trading relative value. That's why you don't learn these things one line. You don't learn these things as a series of colored lines. They're not colored lines. They're markets, and the relationship of those markets change at times. So, as I said, one of the big questions last night was, why did we see what we saw? Why are we seeing this stress in the markets? And it actually comes back down to a very, very simple point about where an awful lot of banks make an awful lot of easy money, and they leverage that easy money up at times. So we've got to be aware of the challenges when this happens. We'll touch on it in Classroom this afternoon. And it's a very, very straightforward process once you understand it, but it's easy to recognize and it's easy to chart. So we should be able to get a very clean, easy answer for you this afternoon in Classroom. Classroom, as usual, this week will start at about 3:30, and we'll get into that proper. So we'll be looking at that. We'll be looking at bonds in a little bit more detail, but we'll obviously be looking at this relationship of S&P against bonds so that we can answer those questions, and we'll take it from there. So we're good to go. One of the things I said to the guys this morning, and this is obviously a little quite significant about what's happened to equities here, is that when we got that really bad news, I said to the guys, if the back end of the curve flattened on that bad news, this was game over. You're going to look at equities sitting around at 35 handle, if that's what happened. It didn't happen. That was the good news. So they dropped the short term so aggressively because the long term was dropping, right? Bond prices were going up, so the long term rates were dropping, but they dropped the shorter terms so much more aggressively that the back end of the curve actually managed to steepen. So it stopped the rot, it stopped the crash in equities. So this could have become a real problem child on this drop here. Could have become. And I gave a warning to the guys in the room. I says the one good thing was, and does everybody remember I said this? The one good thing I said about that whole series of data was it actually managed to steepen the back end of the curve. That's what protected the buy side of equities on that bit of business there, guys. Because if it flattened the back end, as I said, this was over, guys. This was over for 200, 300 points. This was a 10% correction coming up. But it was good news, and the market survived for the time being, at least anyway. To grab some lunch.